All right, chapter 10 is going to be payroll setup. So this is going to be the last section that we're going to be taking a look at, or I guess not in the book, but one of the last few chapters that's going to be focused on the last bottom half of QuickBooks, which is dealing with employees, right? The main core of having employees is you need to record their time and you need to pay them. Simple and easy as that, okay? Yesterday we got to take a look at how a timesheet is created, okay? So today what we're going to do is we're actually going to continue on learning about how payroll works. Now in this case, QuickBooks splits up payroll into two sections. One is to actually set it up, and one is to actually pay using the payroll process to actually pay your employees, okay? So today we're just only going to focusing on the setup. Next week we'll go ahead and dive right in on how to pay your employees. Well, in this case, right, if you're following along, make sure you are using PR setup, which is Payroll Setup 21. Again, the password is Questiva21. So here it gives you pretty much a quick little overview of what QuickBooks does when you actually set up for payroll. It manages your employees a lot more easily, especially when you have multiple employees that are paid at a different frequency. So maybe you have some employees that are salary based, maybe you have some that are hourly based, or then you have some of those employees that show up every once in a while, okay? So, and of course, we don't talk about your 1099 workers because they're not employees, but they are going to be considered an expense for them doing a job for you, for the company. However, our main criteria right now is just to focus on actually setting up payroll, okay? So if you take a look in your book, when we talk about actually setting up for payroll, they actually give you a checklist on what you need to have, which is right here on page 370. Now, in this case, it basically says so step number 1 is to get general information about your employees, okay? And then step 2 says activate the payroll functions. And then step 3 says enter in your payroll accounts and then enter in QuickBooks your payroll items. So in this case, all of these are going to be basically the steps for us to actually activate payroll. But for this one right here, it's to help set up a manual payroll. And then, of course, if we actually have if we use an automated payroll system, which we will talk into chapter 11, then yes, you still need to set it up because it allows you to use the services a lot easier. However, this is primarily geared towards setting up a manual payroll system, meaning you have to manually calculate all of the benefits, all of the deductions, and you have to, calculate all the federal taxes and state taxes to be able and take it out from each person's paycheck. All right. So, but again, with the payroll system, it makes it that much more easier to just process something and be done with it. Okay. But once again, this thing right here has exactly 10 steps. Well, I think once again, you need a step 0, which is going to be, what do you even offer if you have employees, right? Because every company's got to start somewhere, right? And the most key thing about understanding about payroll is, are you able to afford the costs that it comes to having employees? Especially if you're a small business, right? Hiring somebody and having to pay benefits and pay into their Social Security, Medicare, and then adding on top of that a 401k plan, and then on top of that adding medical insurance. At the end of the day, that's why it's one of the major parts of a business, is because you need to have money in order to pay your employees, in order to keep them satisfied, to keep working for you. Because if you're not gonna pay your employees, they're going to say, what? Why? I invested all this work and all this time into here. You're not going to pay me? I'm leaving. All right? So once again, you want to also understand this too. As a small business, you might not be able to afford all of these expenses that comes with having a employee, right? But if you could add some, hope to them, saying, hey, if you can help me get my business up and running, maybe a year from now, I will, introduce some benefits to you, right? You always have to start somewhere, and unfortunately, small businesses, you might not be able to afford these extra benefits, which once again, we will take a look in this in accounting, where we learn the different types of employees and why it's important to have those kind of benefits, right? Because you definitely want to have those high caliber type of working employees, because again, if you are a small business and you offer nothing, they're more likely to just look at you as a temporary job and move on with their career. Okay? So again, you need to think about everything that you're going to offer to, first off, figure out how are you going to pay your employees. Are you going to pay them hourly? Are they salary? Are you going to, and how frequently are you going to pay them? Is it going to be bi-weekly? Is it going to be every two paychecks per month, so semi-monthly? Are you going to pay them every month? Are you going to pay them every week? Are you going to pay them every day? How much are you going to pay them, right? And so on and so forth, okay? So figuring those numbers out should be step 0 before you even process this payroll setup, because if you don't have that information, you will be sitting at the window for the longest time, right? Now, once again, I did mention that maybe as a small business, you start off with a small payroll list, which is fine. You can always, always, always add to your payroll items later, okay? So what does that mean? So like I mentioned before, right? If you don't offer benefits now, a year later, you can always add benefits later, and you just simply just add it in there. You can always use the payroll setup wizard at any given time, okay? You don't have to do it once and then you have to modify it later. No, it's not like the easy step interview. It's slightly different because you could always go back to the payroll setup wizard to go through the questions again and again and again and set up more and more payroll items. Okay? So once we go through all those right here, we will be going through every single step here. So let's take a look at the very first couple steps here. So the first one is to collect your employees' information. Yes, it is very important, because once you start setting up your payroll, we will be using the payroll setup wizard, which actually has you enter in an employee. So you do need to have their W-4 forms submitted to you, so you can go ahead and put in all the information, so then QuickBooks knows exactly how much you're actually going to be taxing and how much to withhold. So you don't have to do that calculation off of QuickBooks, right? So with that being said, you do need to collect all that information, such as proof of American citizen, if you're not, proof of a green card, and proof of a work visa, okay, if you're not a natural citizen. And then, of course, you need your license of the state that you are currently residing in. So if you're out of state, you do need to report that this person is collecting or working from another state, which then you're going to have to properly tax them from the state that they are residing in, okay? There's rules to how you can get taxed, because if you are an out of the state worker, you're going to get taxed in the state that you reside in. Okay? So make sure that you are aware of that. It's not where you work at, it's where you reside in. Okay? And other than that, other withholdings that the employee wants the employer to withhold. Okay. All right, and then again here, second one's going to be activating payroll functions. So once again, if let's see, if you did not set up payroll, right, or in this case did not turn on payroll, it will tell you right here, turn on payroll. Okay. Now, of course, this one right here, if you click it on this button, what you're actually doing is you're trying to activate an online payroll service. So if I do click on active or turn on payroll, because this is a trial version, it tells me, hey, you can't be able to view the things that we offer. So right again, this is using a paid service that Intuit offers. And we'll talk more about that in chapter 11. Okay? So that's not how we do it. What you're going to actually have to do is you're going to actually go to your edit and you're going to go to your preferences and you're going to and then you're going to click payroll. Okay? Go to company and you actually have to manually turn on payroll. In this case, right here says full service. Okay, this is for manual payroll. But if you're going to be using if you're not going to have payroll, then that whole section at the bottom of your employees will cease to exist. It will not appear. But in this case, yes, I am setting up payroll. I'm going to activate it, and right here it says you're going to be using manual payroll. Okay, that's fine. That's exactly what I want. I want this, and I want a manual payroll. Okay, manual payroll. Okay. Okay, so there you go. I activate it. Okay. So there you go. I activated my manual payroll. And once you've done that, you click OK. Now, again, another key things that you have to have, and this will make it much more easier to set up your accounts it will make it that much easier to set up payroll if you have already set up some accounts. So again, if I set up those accounts, I'm going to go to my chart of accounts and I'm going to be dealing with anything that has payroll involved. This is just once again, like I said, it just makes it that much more easier to, what's going on? Come on, chart of accounts. It just makes it that much more easier to go through the payroll setup wizard a lot more easier when you have these payroll accounts set up, okay? Now again, as we know, you can always set it up as you go, okay? And that's exactly what I want to show you here is right here we have already here. This is what the book tells you that in this example here, we already set it up for you already, okay? But these are things that should be considered, right? You should have a payroll expense, which is your means of paying your employees. You have to have a payroll tax expense because again, when it comes with having employees, you have to pay federal and state taxes, okay? And again, that's usually the bare minimum is having those two. Plus, you have to have your liabilities because again, when you collect the money and you're taking it out from the individual's paycheck, what you're essentially doing is you're collecting that money to essentially pay the federal agencies and the state agencies in place of the employee, right? You're holding money from their paycheck because you're going to pay into their individual, whether it's Social Security or Medicare, and you're responsible as a company to pay for it, okay? That's the price of having employees. So you must set up your liabilities accordingly as well, okay? So right here, you have your payroll liabilities, Okay, and all of these are here, right? You got company payroll taxes, employee payroll taxes, and other payroll liabilities. Okay, that's it right there. Okay, now the next section we're going to talk about is called payroll items. Okay, now in this case, that is completely different than actually items and services. Okay, so once again, items and services are strictly for the sales process only. For your employees, there's a whole nother list for that, and that's going to be under list, and it's going to be under the payroll items list. Okay, so list, okay, and it's going to be payrolls items list. Okay, if I go ahead and click on that, you should have already set standards or set items already there, like things that you're obligated to have to be required to take away from someone's paycheck. Is number one is going to be obviously federal unemployment. You have to do federal tax withholdings, Medicare, Social Security, and those are the baselines, okay? Now, as we go through the setup wizard, we will be creating payroll items as we go, all right? So it's not like where we have to go down to the bottom, click new, and go through all that stuff. No, that is a way to do it, but the easiest way to do it is going through the payroll setup wizard. Okay, because look at this now, and then when we come back to this list, it will expand a lot more. Okay. All right. So those are your payroll tax items. So every time when we set up a paycheck, right, these are the items that we're going to be, that's going to be written on the paycheck. So then, again, if you've ever seen your pay stub, right, it's itemized based on what items or what is it, based on what you're being taxed at and what amounts that you're going to be taken off your paycheck. Okay, it's itemized. So again, so you can basically see your gross earnings, and then you see all of your benefits and deductions, and then at the very bottom will be your net pay. All right, and that's what payroll items do. It separates, and it also makes it that much easier to list out all those things that you will be taxed for. All right. So there you go, payroll items. So let's go ahead. Okay, your book gives you a long description of what each payroll item does. And again, each one, again, I'm going to explain it through the I keep saying easy stuff, through the payroll setup wizard. So in this case, I'm just going to go ahead and skip forward. Okay, and let's talk about the actual payroll setup wizard. Okay, there's only one place and one place for it. It's going to be under employees, menu bar, and that's it. Okay, so once again, when I take a look at my home page, there is no setup wizard for anything. Not even on the employee center. So if I click on the employee center, no way that you could set up your payroll. You actually have to manually do that by going up to employees on the menu bar, okay? And then you're going to be clicking up payroll setup, okay? So once again, as you can see, this is what happens, all right? QuickBooks closes all the windows and it's preparing for the interview. Exactly just like how we do our Easy Step interview, right? You have this whole section right here that tells you how to set up your actual payroll. So first thing is going to be company setup. What is company setup? This is where you're going to set up all the benefits, all the deductions, all the ways that you compensate your employees, and et cetera, and offer things such as, Medicare and health insurance and et cetera, et cetera. Okay. Then the second one is you're going to be setting up your employees. So that's why it's important that you collect all your employees' information so you can set them up here. Then the next one is going to be setting up your taxes, both federal and state taxes. And then if you are a pre-existing company, you need to set up your year-to-date information per employee. So once again, what does that mean? So if you look at your pay stub, at the very top, you have it says a YTD. That's year to date. How much has the company paid you? How much has the company paid in tax from the beginning of the year to the end of your fiscal year? So that's what's called a year to date information, is how much has the employee paid you so far? How much taxes have they paid? Because once again, this is so then they can produce to the employees their W-2 form. All right? So, but our assumption here is that when we go through this, we're setting it up as if we are a brand new company. As in, we've never paid anybody at all, so we're going to actually skip that part. But let's go ahead and take a look at this interview. Again, it's broken into 4 sections once again. So let's go ahead and start on our very first one, which is company. Okay. So I'm going to go ahead and click that continue button. All right. So once again, you're going to get this little window. Come on, continue. There you go. You're going to get this window that pops up. Okay, so this is where it starts to set up your company, or set up what kind of payments you make, right? Or what kind of benefits that you have. So we're going to tackle one thing at a time. Okay, and that right here is setting up on how do you pay your employees, or what kind of employees are you going to have. So here, are you going to have salary workers? Yes or no? Are you going to have hourly workers? Yes or no? Are you going to have, are you going to offer any bonuses, commissions, okay? Or sorry, there's just bonuses. And then the bottom one is, do you offer commissions? Yes, I do. Do I offer tips? Do I offer paperwork? Now, again, if you don't know what these extra things are, you can always click on, explain, or what kind of other types of compensations I can have for employees, right? Again, that's why step 0 is so important. So you know exactly, and you're not going to be spending hours on this exact window here. But once again, like I've mentioned before, for any reason that you're not quite sure and you have to research it, then you can actually leave this interview at any given time and come back to it at any given time. It's not going to erase anything. It's just going to exactly stay the same. So if you're not quite sure, then you want to research that. But in this case, right? In this case, I do have salary workers, and I do have hourly workers. However, I don't offer any benefits or any bonuses, excuse me. But I do offer commissions. So what's the difference between a commission worker, right? So in this case, right, I have sales representatives. So my commissions is based off of how many clients that they can bring in, and they get a percentage of the sale or percentage of the deal, okay? So in this case, if one of my employees reels in a customer and, was able to sell a product to them, they'd be able to get either a cut of that portion or et cetera, right? You can also have them have tips. So again, most service companies, right, they actually require you to report your tips, all right, because there is a special rule here, especially in the state of Nevada, because again, if you take a look at the majority of the job market here in Nevada, it is service-based or tip-based workers, right? So what they do here is, if you do select tips, you're saying that tips contribute to their actual total amount of pay, right? And they must record it and report it to you, okay? Again, paperwork, I'm not quite sure what that is, but if you need to, you can always click on explain. So once you've selected your items here, right, I'm going to go ahead and click next. So the next question that you'll be asked here is going to be, how should commissions be calculated? Once again, I'm going to say it's going to be calculated based on right here. Is it going to be on a total amount, or is it going to be a percentage? In this, most cases, a lot of oftentimes commissions are based on a percentage. Okay, so I click on percentage and I click continue. All right, so once everything looks good, I think I clicked back. Next and next. So then now here is the items right here that you need to either modify or change. So then when you do use these payroll items, right, they look exactly the way that it should, okay? So in this case, I believe your book says that you need to get rid of a few accounts here. So let's go fast forward. So right here it tells you that you need to delete the double pay. So maybe you don't offer double pay. You need to change hourly to hourly or hourly regular. All right. And make sure that you link it to payroll expense gross wages. Again, you're going to have to delete overtime, and you're going to change salary to salary regular, and bonus. Oh, I guess you do offer bonuses, and then commissions as commissions. Okay. So let's go ahead and take a look at that in our little window here. So again, if you need to add a new account, right, it will pop up this window once again, and I do actually offer so we have salary, hourly, commissions, and bonuses, right? Okay. Okay, what should you like to call this this hourly wage? Okay. In this case, so now I'm setting up each one. All right, so let me exit out of this so that like we actually do it what the process book says. So in this case, it tells you to double click or to highlight whichever one. So in this case, if I click on double time, right? At the very bottom of here, I have a few entries I could do. I can either add a new payroll item, I can edit, or I can delete it. In this case, the book tells you to delete it. All right, it's going to give you this pop-up window. Are you sure you want to delete it? Yes. All right, I think we have to do that for overtime as well. Yes. Okay, and then we have our first one, which is hourly. I'm going to go ahead and click edit, and this is where you get that window. So earlier it popped up, but I want to show you how to do it on the main screen. So here it says you need to set it up. I want to name this once again hourly regular. Okay. And then again, it's active, and it is going to be an expense. And what kind of expense is it? Right now, it's saying it's under payroll expense. But I actually want this to be payroll expense gross wages. Okay, so you're going to have to locate your payroll expense account, and I want this to be gross wages. Okay. And of course, I'm going to go ahead and click finish. So that's the bare minimum of each and every single one. Okay, so in this case, salary. I'm going to edit the salary. Okay, because I want this to also be salary regular for regular employees, of course. It is an active item, right? We will be currently using it. It's going to be an expense account, and I want this once again to also be gross wages. Okay? And then next or finish. And then here's commissions. So once again, I'm going to edit this information, right? We're going to leave commissions the way it is. It's going to be active, and once again, it's going to be an expense, and we want this to be gross wages as well. Okay, and then this one has next, right, which asks the question, well, what is going to be a specific in detail, all right, default percentage. In this case, let's see what your book says. For commissions, payroll expense gross wages, it doesn't even give you the percentage. So again, maybe it's a per individual basis, as in like maybe it's based on the criteria of what the sale was. Okay. So in this case, I can make up a number, but if I don't want to, that's okay. I could say 40%, 10% of sales, or 10%, they get a commission of 10%. They get paid on top of it, and on top of that, they get a 10% commissions. Okay, and finish. So once again, I didn't have bonus in there. That's okay. It's not going to make a big, huge difference. So I'm going to go ahead and click continue. Okay. So now we're going to be setting up our benefits. What benefits do you offer to your employees? So then you're going to get this window right here that pops up. And it says here, well, let's take a look at what benefits you can offer here. Okay. So the very first one here is, my company does not provide any insurance. Okay. In this case, your book also says, well, hey, you know what? I do offer insurance. I offer at least health insurance, okay, or medical insurance, okay? In this case, right, you could offer dental insurance. There's vision insurance, right, for those that could use insurance to either get glasses or things like that. Vision right here. But in this case, this company only offers health insurance. Okay. And other things that you could offer here is anything like group term list, health insurances, anything like life insurance, medical insurance, Medicare, medical care, FSA. I don't know what that is really. And then also if you offer medical care for dependents or for the family, that's where you can have it, you could check mark it here. So that means the employee pays for medical insurance for their family, then they put in a little more into their paycheck, okay? So yes, there's a lot of things that you can offer. In this case, I only offer health insurance, okay? And I'm going to go ahead and click next. So when they say that you're going to offer health insurance, it says, how is health insurance paid? Now, in this case, this is a true option, right? It's either that the company pays 100% or you have the employee pay 100%. Now, in most cases, it's usually a 50-50, right? The any company that pays half and half, right, is where the company will contribute to your health insurance and you contribute to your health insurance. In most cases, what happens here is, if that's the case, you always, every time you go to a doctor's office, you're always expected to pay a copay because of this reason here. But if most cases, if your company completely pays for it, then you don't have to have a copay. And then same thing, reverse and reverse, right? If you have to pay 100%, then of course you have to pay whatever the doctor visit is, right? The insurance does not cover it or anything, etc., etc. Okay? So most cases, oftentimes, especially depending on how big the company is, sometimes a company would not cover you 100%. They're more likely to have both the company and you contribute as part of the Medicare. Okay. So once I selected that, now it says that is the employee portion deducted before or after taxes. Now in this case, this is also a decision that the company has to make. When are you going to actually be taking the medical insurance away? Oftentimes, this is usually taken after the taxes, right? It's an extra payment that is taken away from an employee's paycheck. Especially if you do it before, which in some circumstances, yes, it can happen before when you get your federal and state taxes, right? But that's very, very unlikely because again, if you're deducting money right away from your paycheck, from your gross wages, instead of taking it out from your net wages, the only situation there is that you may have to pay higher federal taxes because, you're subtracting money that you've earned, which is going to essentially be the money that you're actually supposed to pay for taxes. So in this case, most common one is that it's usually deducted after you've been taxed. So you're going to be taking it away from your net pay versus your gross pay. Okay. So in this case, right here, after taxes. And I'm going to go ahead and click next. So once again, you're going to get this window here, which says, well, who is this person that you pay? And how do you want to set up scheduling? In this case, I believe you could just go ahead and skip this section here and say I don't need to have a regular payment schedule set up, right? And I click finish. Okay. And there you go. Then you have it up here. You have two types of medical insurances because again, the employee has to pay, and so does the employer has to pay too. So in this case, let's go ahead and modify these names because once again, I believe your book tells you that you need to modify it for this particular section here. You're going to actually delete company health insurance. Company health insurance. So that's what the book says. You're going to delete it. Yes. And now you're left with just one. And you're going to change this and rename it to health insurance to medical insurance. Okay. So I'm going to go ahead and I double clicked on it to edit the information. So again, I want to change health insurance employee or taxable to be medical insurance. Okay, medical insurance, and yes, it's going to be active. Okay. You don't need to have anything there. Okay, and I'm going to click next. Once again, we already saw this window. No, you're not going to have any payment scheduled just yet. And you're going to click next. And then now this is where it asks you, it's going to ask you, well, in this case, if you're going to have it after you're being taxed for the employees, in this case, what kind of liability account are you going to attach this to? Now, in this case, right, we are not going to be having this as a liability. We're going to change this to an expense account because this is health insurance, right? It's not a liability. It's definitely an expense. So in this case, now I need to change it to, I think it's going to be, let's see what your book says. Your book says it's going to be use the expense for insurance expense health insurance. So let's take a look through this list. Unfortunately, this is where you cannot type everything in. You're actually going to have to locate it yourself. So here it is. You have insurance expense, health insurance expense. There it is. You have insurance expense liability. So this one right here. Okay. And so that's it there. So this is setting up your account. So once again, it is not something that the company owes, or that you're not going to have the company pay for, that owes this employee this. You're going to have it as considered as an expense, right? And then I'm going to click next, and then it's going to ask you this question: what kind of tax are you going to be using? In this case, we're going to be just using the standard tax settings, right? And finish, or next. So then once you get there, it says right here, we're actually going to say do not calculate, and we're going to be entering in a flat amount. So in this case, the amount that we're going to be taking away per person per paycheck is $100. Okay, and again, it's an actual limit. Is there an actual limit to this? Yes, there is. Okay. Okay. Yes, and it's going to, we're going to change this to have the actual limit restart at the, at each month. Okay. And then again, it's going to have a default limit. In this case, I believe health insurance doesn't have an actual limit to how much a person can contribute to it, right? Because in this case, it's whatever you put in is whatever you're going to come out to as, okay? So it doesn't matter what the limit here is, okay? Okay. Everyone good with me so far?
Yes.
Okay.
Yes.
So now I'm going to go ahead and click finish. All right, so there you go. I set up my health insurance, and I can go ahead and click continue. So for any reason you do end up offering vision and dental insurance, you can set that up exactly the same way later on. All right. So the next set of benefits is going to be what else you offer in regards to providing any retirement plans. Okay, that is a benefit for employees, right? In this case, you have a list of a whole bunch of retirement benefit plans that a company can offer. Okay, you have here a 401k, which is the most common one that a lot of companies use. Okay, you also have a single IRA. In this case, this is really weird because most employers usually don't offer IRAs, because an IRA is an individual retirement plan. So what that does is usually you go to the bank and do that yourself. I'm assuming the company is going to set that up for you, but in this case, the company cannot offer an IRA because that is an individualized retirement plan. It's something that an individual does on their own to obtain an IRA. So that's why I said this is kind of weird that a company would offer an IRA. Usually they would offer a 401k plan. Okay. That's the most common one you often see. More likely is that they'll offer you a 401k plan, or they can offer you the other ones, which is like a 4136, 403b. I don't know what those are really in detail. But here are the options that you could choose from if you know your research. Once again, that's why step 0 is important, again, because you need to know what these benefits offer in order for you to offer it to your employees. But again, the most common one is a 401k plan. It's the most widely known one. So I'm going to go ahead and click yes. We offer our employees a 401k plan. Okay. And I'm going to go ahead and click next. So once again, you're going to see this window. This window usually won't pop up unless you're setting up the individual account. So I'm going to go ahead and click next. All right. And then here we have, right here, you have the 401k match and then 401k employee. Okay. Now, again, most cases, right, a 401k, what happens is that your company is going to match up to a certain percentage for an employee, right? Because the employee can choose how much percentage of their paycheck is actually going to go towards a retirement benefit plan, okay? I believe the maximum you can go for is up to 6%, and that's actually a very high rate. But if a company says, no, the minimum that you could do is less than 4, then that's the agreement, right? And usually the company could either match you dollar for dollar, which is 100%, or they could say, I'll match you, for every $2 you put in, I match you $1, so 50%. And that's the common one that most cases do, depending on what kind of company you are in, and how, you know, if most cases, if they are a huge corporation, they're more likely to have the money to be able to give you the best benefit plan. So they could do dollar for dollar. Okay, but in this case, let's go ahead and check out, or let's go ahead and set up each an individual account here. So the first one we have here for the one that right here we're going to look at is going to be the 401k benefit plan. We're going to take a look at the company one, which is the matching, okay? Because the company is going to match you, all right? So here, we're going to go ahead and edit this. And we're going to change this name. Instead of saying 401k company match, we're going to call this match 401k. Okay? And then, let's see here. So we're going to name it to match 401k. It is an active item, right? We don't need this part right here, so we can go ahead and click next. Now here it's going to say, would you like to schedule the payment? Select I don't need to set up a payment scheduler. Okay, so once I've done that, then the next question here is asking, well, what kind of expense account are you going to be linking this to? So once again, in this case, right, you're going to link the expense account to payroll expense employee benefits. Okay, so once again, it is an expense, and right here, I know my window is a little funky here, but if I can click that little tiny thing right there, I'm able to locate payroll expense, payroll employee benefits. Okay, that's the expense account that I'm going to have it linked to because it is an employee benefit, right? And because the idea of having the employee and the employer, right, make this contribute, right? Now we're just working on the company. Therefore, I have to owe money because I'm taking away from the individual's paycheck, right? But I'm also putting in my own money into this 401k plan. That's basically, I don't have to pay as I make my paycheck, right? I pay and I owe, and then when I get to that date, then I can make my payments there. So in this case, I have to owe money, okay? And we're going to take this liability account and we're going to change it to payroll liabilities, other payroll liabilities, okay? So I'm going to click here, other payroll liabilities, right here, okay? And then I'm going to go ahead and click next. So now it's going to ask you this question here. Am I going to use standard taxing? Yes. In this case, you're most likely to you're safer with going with that option. Okay. So then we get to this window here where we need to set up how much we're going to be taking out from the individual's paycheck. All right, at the very top it says do not calculate do not calculate enter in a flat amount. In this case, we're not doing that. We're doing it as a percentage. All right. Now, in this case, what is the actual percentage? For this one, because we are the employer, we're only subject to have to pay in only 2%. Okay? 2%. Okay? I'm going to put the percent sign just in case. It recognizes as a 2%. Okay? And then it says how often or at when does it restart. You're gonna do this and click here where it's going to be a percentage of pay annually actual limit to restart at each year. Okay, usually for retirement benefits, they usually restart at the end of the year. Okay. Okay. And then, is there a cap limit? Yes, there is a cap limit, and that is $5,500 per year that we can contribute to person's retirement plan. Okay. And I'm going to go ahead and click finish. Okay. So that's setting up the company match 401k. So I'm going to go ahead and do the same thing for my employee. Okay. I'm going to enter in here saying this is not what I want to put here. In this case, this is going to be 401k employee. You're going to rename it to 401k deduction. Okay. 401k deduction. All right. Again, it is an active item, so I can click next. Once again, you're not going to schedule any payments. And then here, it's going to say, well, what kind of an account are you going to put this as? And in this case, once again, for this 401k employee, you're going to change the liability account to payroll liabilities, other payroll liabilities. Okay. Other payroll liabilities. And then I'm going to click next. So then here we are, used standard. Okay. And then now it says here, do not calculate. It's going to be as a percentage. And this time, my employee can subject to choose up to 4% of their paycheck. Again, this is adjustable per individual basis. Okay, if a person does not want to contribute that much to their 401k, again, you can modify that on an individual basis. Actual limit ends restarts per year, and this time the limit for an employee to contribute to their own 401k is going to be $4 limit here is going to be $16,500. Okay. All right, let me go back real quick because I'm supposed to put some vendor in here. So payee to the person, right, is going to be Merrill Lynch. Okay, so I skipped that part by accident. So vendor that we're going to be paying is Merrill Lynch. That's the person that's going to be taking care of our business here. Merrill Lynch. The account number is going to be 99 dash 99 dash 1 2 3 4 5 6 7 8. Okay, and I'm going to go ahead and click next. Okay, so once again, this is the employee. The employee can be able to put in up to 4% of their paycheck, and it's going to restart every year, and they can go up to the maximum amount of $16,500. Right? And I can go ahead and click next. So now everything looks good. Everything is done. Everything's set up. So now I can go ahead and click on next. Okay. Or continue. So now this is going to be setting up the employees' extra deductions. Okay. So in this case, what can an employee be in this case? I guess, I don't know. This one could be a deduction slash benefit, whether you pay for sick pay or not, vacation pay. So in this case, it says right here, my employees do not receive this. Well, they don't. They actually receive vacation pay. Okay. Now, in this case, especially for this kind of company, you should offer your employees at least sick pay or other benefits would be vacation pay, PTO, things like that, personal time off, or paid time off. Okay. In this case, we have right here paid time off, which is also known as paid vacation time off. Okay. Yes, we do offer that. And I'm going to go ahead and click finish. Okay. So here it says we have hourly vacation and salary vacation. Okay. So if I go ahead and set this up, right, I'm going to go on each account here. So again, I'm going to go into hourly, salary, vacation. And what we're going to do, we're just going to set up the account. There's nothing else. We want to keep it exactly where it says right here, where it says hourly vacation. That's completely fine. I'm going to edit this, but the only thing I'm going to do is just link them to the appropriate accounts that needs to be here. So again, this is an expense account. Okay, set the expense account to payroll expense gross wages. So again, this is a benefit because it goes towards their paycheck. It doesn't take away from the paycheck. So again, payroll expense gross wages. Payroll expense gross wages. Okay. And I'm going to go ahead and click finish. So once again, I'm going to also do that to my salary as well. Just link it to the appropriate accounts, gross wages. Okay. And click next. So there you go. I set that up that it's part of their gross wages that they can, because we're going to pay them for the time that they are taking a vacation. Okay. Continue. All right, so this is where your deductions are going to be, because yes, you can have other deductions that can be taken away from a person's paycheck. Okay. All right. Now, what can those deductions be? Well, it could be miscellaneous additions. It could be things like mileage, things like anything that's taxable, any fringe benefits, any cash advances, any things down here in this list. Any union dues, that's going to take money away from your employee's paycheck, or any miscellaneous things. So in this case, any additionals here, in this case, nothing that I offer is going to be here. So I'm just going to go ahead and click finish and then click continue. All right. So now I've completed my my company setup. Okay. So once again, that section was in case you do offer such as like reimbursements for travel, right? That comes out, that goes back into your paycheck, or you get written a check for that. You know, other benefits, or in this case, it's a deduction. Again, if you offer meals and, you know, meals, if you, any fringe benefits. So if you are this, so for example, this is Academy Photography, right? A fringe benefit would be discounted tickets to go towards, you know, like you get invited to the Met Gala, right? That's a huge event, and a lot of photographers are there, a lot of celebrities are there. And if you get an offer to go to the Met Gala, right, that's going to be considered a fringe benefit. And yes, you do have to pay into the fringe benefits for you to be able to get the benefits. So other than that, here we are done. And now we are finally going to set up our employee. Okay. So let's take a look at how we set up our employee. So this part is actually going to be very, very long, but let's take a look at how extensive each question asks about the employee. So this is where you need to have your W-2 form, or your W-4 form, your, you know, proof of a document that they're a U.S. citizen, social security card, and the ID, because you need to report where they live, what resident, where the exact address is, what their age is, and et cetera, et cetera. So you need to have all of those copy of those legal documents for you to submit and be able to answer these questions. So I'm going to go ahead and click continue because we're going to be adding our very first employee in here. Okay. So employee number 1, what is her legal name? Okay, so in this case, it has to be the legal name on either the birth certificate or social security card, and or license. I believe the license, you have to have your legal name on there. Okay, so in this case, this is Katie Reynolds. Now I can say Katie could be Kate Lynn Reynolds. Right? Sorry, that was just first name. First name Caitlin, and her last name is Reynolds. Right? So then right here it says, do have, this is what her printed check is going to be. It's going to say Caitlin Reynolds on it. But if she has a nickname, you're able to also write that in here saying that this person has a nickname. So in this case, it's slightly different than the old one. So in this case right here, employee staff is active, right? Her name is going to be Caitlin Reynolds. Okay. It's important that you have here on the old one, you have a small section where you can put a nickname on there. But again, in this case, it doesn't have it. So I'm going to go ahead and put Katie, since that's what your book says. It's Katie Reynolds. Okay? And yes, she's active. Yes, you do need to put every single person that you have employed over the years, especially when it comes into filing for taxes. So for maybe that year, if that person isn't working there anymore, then that's where you can you don't necessarily have to put them in there, but let's say someone worked the first half of the year, you do have to put them in there for tax purposes. All right? There you go. And then now the next section says right here, contact information. What is her home address? Okay. So in this case, her home address is going to be 432, okay, Enos Lane, Enos Lane, okay, City, she lives in Danville, California. And her zip code here is going to be 94501. Okay, so that's her address right there. Now, what this does by you feeding this information into QuickBooks is it's going to automatically pull up all of the state taxes that this person is subject to have to pay. Okay, so we mentioned this before, right? If someone is working from out of state and by you feeding information into QuickBooks, let's say I put the state of Nevada. State of Nevada does not require state taxes. So in this case, it's going to pull up all of the Nevada taxes that Katie has to pay, right? Because it's based on the individual's residency. So if they live in the state of California, then you're going to be subject to pay California tax, any California tax. Where in the state of Nevada, you pay whatever state taxes that are required for employment for the state of Nevada. So in this case, QuickBooks is very, 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 very smart by feeding you information, right? And this right here will pull up the information automatically about Katie. Okay? And whether she's subject to this tax or not. All right, and then once again, that looks good, and I am going to go ahead and click next. So now here's the next section where it says when did this, what kind of type of employee this is Katie. She is a regular employee, okay, right? You have the options of regular, officer, statutory, and other. So when we talked about in accounting, the different types of employees that you can have, right? The most common ones that you will have is common law or statutory employees. Those are also known as your regular employees, right? Your common law is your regular employees. Okay? She's a regular employee. Okay? Other hiring information. Well, in this case, what is her social security? That's very important because we need to make sure 3 things. We need to make sure she's a U.S. citizen, okay? Or has, in this case, you can obtain a social security if you are a illegal immigrant, right? You can have a temporary social security card, and we call that a temporary green card or social security that allows you to work. But in this case, she does have a social security card, which is going to be 33322-4321. Okay? And then, of course, it's important that you have, okay, so the hire date, this is going to be important because you want to make sure that you fulfill the whole section for her for filing taxes, because when you produce their W-2 form, this is what the information you need to have. Okay? And she worked there since 2008. Okay? All right, release date. Okay, once again, release date means when did you fire her, or when did she quit? She's still currently working for us, so no need to put that in there. Again, this is only a reference point, so then when you do file a W-2 form, it states when you stopped working for this person. Okay? All right, and then her birth date. What is so important about a birth date? Why do we need to know her birth date? Anybody?
To make sure that she's old enough to work the job?
Correct. It's not for us to have the office celebrate for her birthday. No, it's to make sure that she is legal of age to be able to work, right? Anybody that's under the age of 18, I believe, anybody between 16 and 18, I believe they have limited work hours, but they could still work. They can only work a part-time job, where she's 100% legal age enough to be able to work a full 8-hour shift, 8 to 12-hour shift. Okay? So there you go. And then gender. Now, this is optional, but unfortunately, QuickBooks only has 2 options, a female or male. For those who do not want to disclose their information, whether they're female or male, or they're gender neutral. Again, you would leave this section blank. You wouldn't fill it in. But once again, this is only for statistic content, I guess, or information about statistics, about how many certain types of genders do you have in your company. So this is again for statistics, but it's also for the IRS, because if you do not know, corporations must meet a certain guidelines. So if you are a female or working in a male dominant type of company, you're more likely to be hired due to the statistics of equalism. Yes. So again, that's what this is for. But for your employee to not feel comfortable to disclose it, you do not need to enter in anything. You can just leave it blank. But in this case, she said, it's okay, I'm female. Let's go, and yes. Okay, so next. Okay. So now we're going to be talking about, tell us how you plan to pay Katie Reynolds. Okay, in this case, straightforward, right? How often are you going to pay her, right? So here's the option where you have to figure out, are you going to pay her bi-weekly, right? Every 2 weeks. Are you going to pay her semi-monthly, which is 2 paychecks per month? So the difference between bi-weekly is you get 26 paychecks. By semi-monthly, you get only 24 paychecks. Okay, so you only get paid on the 15th at the end of the month. You could pay her every week, pay her every day, whatever the circumstances is, you can have that option, right? If you if you click on this drop-down menu, it gives you this option here. You can pay as needed, which is daily, again, weekly, bi-weekly, and etc., etc. So again, I'm going to pay her every 2 weeks, right? I'm going to pay her on a semi-monthly because she's a salary-based earnings, right? She earns salary, meaning I'm going to pay her at the 15th and the end of every month, okay? And she's going to get the same exact check amount every single time, all right? And in this case, what is the salary amount? She earns $60,000, and that's a really good job, okay? Per year, yes, usually salaries are per year, okay? So that means she earns roughly $2,500 a month, okay? And again, right here it says salary amount, which is $60,000. And that is it. Okay, nothing else. So I'm going to go ahead and click next. So then here is how we set up what her benefits entails. She gets to, yes, she gets 401k. Yes, she gets 401k match. And yes, she gets medical insurance. So in this case, by clicking them, check marking them off, it filled the information for me. But however, it did not fill in. Any. No, it did. All right. So again, let me drag this out so you guys can see it just slightly a little better. Okay. So here it gives you the cap max amount, right? Since we selected that we're going to have the deduction. Therefore, she's going to contribute X amount from her paycheck, which she gets capped at 16,500, and the company is going to match her 5,500 per year. She's going to pay into $100 for her medical insurance. But again, there's no limitations to health insurance. Okay, so all of that looks good, and I'm going to click next. So this is where you are going to need to determine how much vacation time that Katie is allowed to have, right? Because you said you offer her vacation, right? So in this case, calculation, all right? What is the total amount that she can earn? Okay, in this case, you're going to type in here for the PTO, okay? For here, let's see what your book says. Okay, so here she earns 80 hours, okay? And it's going to be starting at the beginning of the year. In this case, yes, you definitely want it 80 hours starting at the beginning of the year, okay? So that means she has a total of 80 hours that she can have for vacation, all right? And then it says right here, unused vacation hours. What do you want to do with it? You want it to carry over to the next month, or do you want to restart every year? So in this case, I believe it's you have an actual limit here where it doesn't restart or carry over into the next month. Okay. And then here, let's see, time off currently. Okay, so here again, number of hours, none. And then again, Katie Reynolds earns time off currently. Yes, so that's already there. So in this case, that is it. All right, hold on, sorry. Where it says right here, where it says actual have a limit, she has up to a maximum of 200 hours. Okay. All right, then down below basically says a year to date. What has she incurred already and what has she has now? In this case, I'm going to go ahead and skip this part over just because in this case you don't really have to have any information there because you could say that the balance that she has right now, currently as of today's date, you could say she has 200. And how many has she used so far? She used 0 because this person's starting. Okay. All right. And I think that's supposed to be per week, if I'm not mistaken, instead of per year, but that's okay. Depends on what your company wants. So I'm going to go ahead and click next. All right. So now, next is I need to set up if she wants to set up direct deposit. Now, it depends on what your company is. If it's smaller than 20 employees, unfortunately, you do have that option whether you want to pay the bank to process bank deposits or not. In this case, you can set up this, but in this case, I'm going to have Katie Reynolds pay not by direct deposit. So in this case, you need to have their bank information. So again, that's something you need to collect from your employee if you do offer direct deposit. But in this case, no, I don't offer it, so I'm going to click next. Okay. So now the next thing is going to be talking about withholdings. Finally, we get to her taxes. So then again, like I've mentioned before, because we entered that she lives in the state of California, she is subject to California tax. Okay? Again, states subjected to unemployment, it's again California. Okay? And again, it says right here, while working for you, has she ever worked at another in another state? You say no. So this is where you need to have your W-4 form, because this is where you're going to file or put the information in here, so then you can take the proper taxes away from her. So in this case, it's going to ask you, what kind of W-4 form are you submitting? Did she do the one from 2019 or the one for 2020? Now in this case, she's been an employee for us since 2008. So our assumption here is that she is going to be having a 2019 or earlier type of W form. Nothing has changed. So therefore, if you know the difference between a W-4 form from 2019 to a W-4 form from 2020, they're completely different forms. Okay? 2019 and earlier, they were using the number of allowances that you can withhold system, where your the W-4 form for 2020 is going to go based off of an actual amount, and it's going to include all of the income that you can collect from primary, secondary, and tertiary jobs. And they're going to subtract it out as an annual basis, not per withholding. Okay, so that's the difference between the two. Again, in accounting, I will elaborate and explain more details in the difference between the W-2 forms between the 2019 and the 2020 version, or the 2021 version now. But in this case, your book says that she is currently using the W-4 form for 2019 and earlier. Okay. So again, the amount of withholdings that she has is going to be that she has 2 dependents, so that means 2 allowances, and any other deductions she has 0. Okay, 0 deductions. Okay. And again, does this apply? No, it does not apply for any of them. And then again, she's not a legal alien to be hired as an employee. So in this case, those things don't apply. Okay, she's an actual American. She's actual a U.S. citizen. Okay. Next, so then it's going to calculate all these all these taxes that she's subject to pay. So again, federal taxes, state taxes, unemployment taxes. Again, she doesn't pay unemployment, but in the state of California, yes, you do. All right, next. All right, so once again, now this is setting up her, what is she? She is married, okay? What is the regular number of withholdings that is allowed? She has 2. What is the estimated total deductions? 0. And what's the extra withholdings? 0. Okay. And I'm going to go ahead and click next. So then this question asks, okay, now when we enter in any additional state taxes, any deductions like that, this is what she is subject to. Again, she's subject to California employment tax, and she's also subject to California disability. Okay. Is this employee subject to any special local taxes? So in this case, what is a special local tax? Well, I'll give you an example, okay? In San Francisco, you know those little trolleys that run through the state, or run through the city? That's going to be considered a local tax that you have to pay to fund or to keep that local transportation running. So again, New York has to keep their underground subways from running because it's a form of a public transportation. So in that case, yes, you can be taxed a special local tax. But in this case, she lives in San Jose. There's nothing like that. So no, she's not subject to any special local taxes. Okay. So I can go and click next. All right. So here is where I'm going to enter in the California wage plan code here. This is going to be the S code. Okay. In this case, if you want more details into it, you can take a look at this. But S code is the standard state code here. Right, that's what your book says. Right. So then that is it. And that is all you have to do in order to enter in an employee. Now, think about it. That took forever to enter in all that information because, once again, you need all of these documentations to go ahead and enter this person in here. Now, I'm going to tell you this. You do not need to do this for every single employee here, okay? You're able to do that outside the interview, okay? It's the same exact process as entering in a new vendor, a new customer. You go to the employee center and you just click in new employee. It's easy, okay? This one just shows you an example of how to set one up, right? And what the details that you need to have, and etc. Okay? So I can go ahead and click continue. All right. So that is going to be it so far. We're going to go take a break now. Any questions up to this point?
No.
No.
All right. All right. So go ahead and take your 15-minute break now.